How much money do you actually need to start trading? There's a question that many traders have, especially beginners. Now, although many things may come into play when it comes to answering this question, we could still provide our best recommendations and why. So in this video, let's discuss how much money you really need to start trading. Let's go. All right, guys, so how much money you actually need to start trading? First and foremost, let's get this out of the way. You can start trading with any amount of money, especially when it comes to the forex market. Forex brokers usually have a minimum deposit of about $10, a little more, a little less depending on the broker, but ultimately any small amounts of money will allow you to start executing a trade in the market. So as far as answering the question directly, how much money you need to actually start trading, or in other words, how much money is minimally required to execute a trade, just about any amount of money, really, $1, $2, $3. Again, the minimum might be $10, so you'll have to put in $10, but even if your account falls below $10, you can still execute some trades. So technically, any amount of money is kind of tradable. But the real answer that you're probably looking for is, what is the recommended amount, especially if I'm like a beginner or maybe an intermediate trader, or what can I expect if I'm more of an advanced trader as well? So let's get started with beginners. If you are a beginner trader, here's my recommendation. I recommend that you start with $100 to $200. And now, I know there are many factors that come into play, whether you actually have $100 to $200, whether you have way more than $100 to $200 to spare. Maybe you have $500 to $1,000 to spare and it won't hurt you. But this is why I say $100 to $200. When it comes to beginners, first and foremost, your primary responsibility is to make sure that you are learning the skill as much as possible, and you're learning the ins and outs of the markets and what things are and how they work. Before you actually start trading, it's important that you actually use a demo account, not necessarily because the demo account is directly going to translate to an actual real account, but because you want to get familiar with different things like lot sizes, different ways that money goes up and down depending on the lot size that you chose, and making sure that you start to understand how to manage your risks. So all of the functional things and understanding how to go in and out of a trade and how to handle a trade, how to manage a trade, you should do all of that on a demo account. Now, after you've gotten the hang of things, I strongly recommend that you now, as a beginner, put in $100 to $200 into your broker account to actually start trading. Here's the reason why I say $100 to $200. The reality is your demo account can take you but so far. You need to start mimicking the actual live market environment. So you actually need to get a taste of trading live as much as possible. And at the same time, you don't necessarily want to be trading with just $10. You want to be trading with a certain amount that's actually decent, where you can actually start to see the progress that you're making and feel the progress that you're making as well. So there's a big difference between making a $1 profit on $10 versus a $20 profit on $200. So it's a huge difference, and you need to start feeling that as you are trading in the market. But at the same time, on the flip side of things, because you're a beginner, you're going to be prone to many mistakes. And as a result, you're going to take many losses. So even if you can afford to lose more than $100 to $200, you can afford to lose $500, maybe $1,000. That's fine, but still start with $100 to $200, because ultimately you have so many mistakes that you need to make and learn from as a beginner, that if you could practice on a small account, $100 to $200, and start to try to build that, even when you fail and you blow that account, guess what? Out of your $500 to spare or $1,000 to spare, you can always upload that again. Versus if you just started out with all the money you had to spare before you just blew it all, and now you have to wait before you put money back in your account, or even worse, you take money that really shouldn't be traded and you start putting it in the account and you start trading it. That's what you want to avoid as a beginner. So remember, the name of the game as a beginner is to be able to stay in the game as long as possible. Ultimately, because you're going to make mistakes and you're going to take losses, and guess what? You're going to blow accounts, whether you like it or not. You're more than likely, 99% of the time, you will blow accounts as a beginner trader. So keep yourself in the game as much as possible. If you want to load your account at $50 intervals and just start practicing growing that $50, and even though you blow it, you have another $50 to put in that account, fine, do that. If it's $100 to $200, fine, do that as well. But try not to go beyond $200, especially in the beginner stage, just so that you can keep the risk on your actual capital as low as possible and you give yourself enough room to grow and learn accordingly. So next, for an intermediate trader, I would recommend anywhere from $500 all the way to about $1,500, maybe even $2,000. So for an intermediate trader, you've gotten the hang of things and you probably have a strategy or two that really works for you. And you're just working on the discipline to make sure that you carry that strategy out over and over, as well as finding a plus setup. That trader is still going to make mistakes and is still going to take losses, may even blow more accounts, but ultimately they're still in a position to start growing that account little by little. So if you are an intermediate trader, I say start around $500 if you can, because ultimately you want to start feeling a little satisfied when you are making those profits. So now when you are making profits on your $200 account, and you made 10% in a day, which is really, really good, obviously, you only made $20. So although you made 10%, especially as a beginner, you may not register that the way you should. Versus if you made 10% on a $500 account, I mean, $50 is not gonna change your life, but you can get some lunch, you can get a couple things, you can still do something with the $50 that you earn from the market. And that alone is satisfying. However, if you do have a little more, and again, this is money that you're willing to risk, money that you're willing to say goodbye to, because more than likely you may not see it again. So if you do have a little more, I would say go even to about $2,000 as an intermediate trader. Again, if you make 10% for the week, for the month even, that's $200. And again, more satisfying to you and allows you to be motivated to keep on going. As an intermediate trader, you are a lot better now. You're starting to understand the market, but you are going to still make mistakes. And typically the mistakes that we see that intermediate traders make is solely from cockiness. Right? You think that you figured it out. You think that you've learned the strategy you needed to learn, and you go into the market a little cocky sometimes. Maybe even after a couple of wins, you go in and you want to start risking real heavy. This is what trips up a lot of intermediate traders, and unfortunately, what causes them to start blowing their accounts as well. So if you are in that stage, although you may have maybe a $5,000 to spend, and again, this is hypothetical, but if you do have $5,000 to spend, let's just say, you probably want to cap that around more so around $2,000, just because you still are going to make some mistakes. You still may over leverage. You still may possibly blow the account, and you want to, again, stay in the game as long as possible. And ultimately, $2,000 is not a bad amount to start from as an intermediate to eventually grow it to like $5,000 and beyond. So definitely my recommendation, $500 to $2,000 if you are in that intermediate trader range. And now finally, the advanced trader. The advanced trader can go from that $2,000 and beyond to infinity, really. Because as an advanced trader, the expectation is you've had a strong handle on your strategy, you have a very strong handle on your risk management plan, and ultimately you're one who really sticks to your plan. It doesn't mean you don't encounter losing streaks, but what it does mean is that even when losing streaks come, you are able to withstand them and still maintain your account over a long period of time. That type of trader is ready for large amounts of capital, because ultimately at this stage, you've probably dug yourself out of many holes. You know how to handle yourself in deep drawdown, and you know ultimately how to take a step back, reanalyze things, and recover. So ultimately, as an advanced trader, you are ready to trade any amount of money really, but I would just recommend that you progressively take steps towards that amount of money. Meaning if for one reason or another you fall upon a large sum of money, again, don't put all of that in the account still. You want to make sure that you stay in the game. It doesn't mean an advanced trader is going to be prone to blowing an account, but it could still happen even to an advanced trader, okay? Progressively increase your capital or progressively grow your capital. All right. Again, if you're an advanced trader, you should be able to do that. And then as you continue to follow your rules and as you continue to do the things that got you to that stage, you'll start seeing your profits grow more and more and more. So guys, it's very important to know this is just a general guide, right? It may not apply to every single person. Everybody's different and they're coming into the market very different and coming in with different circumstances. So it may not necessarily fit you, but this is a general guide to around where you should aim for as a goal, depending on what stage of trader you are at. All right, guys. So ultimately, please just also be advised that you should not be taking money that belongs to paying bills, that belongs to paying rent, mortgage, etc., that belongs to doing anything else that is really important, or in other words, that you can't afford to lose, and loading it in the market, hoping that you'll flip it. Even if you were to have done that before, you're not guaranteed to do it next time. You want to make sure that the money that you're trading is money that you're okay with losing. Okay, if you don't have that, then you have to work to get that. Put in some overtime, get an extra job, get a side gig, do whatever you have to do, because if you're really passionate about this and you really want to grow and advance in your career as a trader, then you'll do everything that you need to do to get that capital so that you can keep on trading. So I hope you guys gained value in this video. If you did, please like, share, and subscribe. I truly, truly appreciate it. And until next time, guys, peace.